Vincenzo'S Gold Crypto Investing. I'm going to try to get this video out, but I got the program director outside on his leash, and he's just going all over the place and making this very complicated. But now he seems to be laying down a little bit. But you can see last year when I made this channel, I started going over when the home supply, you can see as of April, the last print, because they're about a month late, is at 9.0. And the higher that number is, it usually correlates with a recession, as you can see in the past. And the higher it is, the more homes are on the market, the more homes are on the market, the more it's saturated, the more it's saturated, the more the homes sit. And the more the homes sit, the prices come down. And last year, also, I have a thing to talk about Biden here in a minute before we get into the Bitcoin chart and the Bitcoin price, that I think Biden's lying and or stupid and or a combination of both when he talks about businesses, oil, profits, and whatnot, right? But you can see we were down about 2.6 or 2.8 on a record, all-time record low when I made my first video on the housing market. And I thought by the end of 2021 would be at 6, 7. And we got up there by the end of 2021. And I thought by the end of this year would be pushing 10, 11, 12, nearing all-time highs, and a recession would be coming on this year. And you can see on the last print, we're at 9.0, and the home's price is starting to level off now. And the higher this gets in the home supply, and the longer it lasts, you're going to see the home price is starting to come down, right? So it's 9.0, another phenomenal call by Vincenzo. If you've been paying attention, correlating the housing, the finances, the monetary policy, and the cryptos and the stock market and gold and silver bullion all into one. It's all correlated and interconnected, right? And you can see now the home supply, the medium home sale price. You see we had a brief recession until the Fed printed its way out of it briefly, and now we're into an inflationary depression, which is going to be much, much worse. But you can see the home supply starting to level off. But here's my thing on Biden. He's blaming corporations for not drilling and producing more oil, and he's also yelling that they're making a profit. Well, if you're getting mad that they're making a profit, they're not going to have the means or the will to go out and explore and produce more oil, right? Your policies and what you're doing are affecting the oil market, not Russia. It has a little bit to do with it, but your policies taking the Keystone pipeline out, right? Anti-oil and gas on your policies, saying you love the gas prices going up, and you're making your regulatory regulations making it harder to get these oil companies out there to invest and produce oil based on your own policies, right? You're blaming greedy corporations. It's not the greedy corporations, it's your policies, your administration and prior administration stance on oil that's causing this. Your policies. Every time you make it harder and harder to make a profit, you're going to get less and less people producing oil, which means less supply, higher price, right? Supply, demand. If you make it more friendly for them to invest and explore and produce oil, they will. But your administration has been at war with them, just like the Obama administration. Whether you're a Democrat, Republican, or nowhere in between there, those two administrations have been very, very, very on the attack against oil and gas because they think it's bad, right? But now they're demanding them to drill more while not giving them new permits to explore and making it financially harder to do. So they're not doing it, right? It's your fault. And he's only placing blame on greedy corporations because Biden himself is a socialist communist, like Obama, to some extent Trump, but Trump tried to mask it a little bit. But they're all on the socialist side, and their policies are dictating this, and they're the ones causing this massive oil shortage and the massive skyrocketing in inflation, right? It's them, it's the government, but they like to place blame on everybody else. And the socialists and communists like to bring capitalism and businessmen that produce a profit. If you don't produce a profit, you're not going to get the products you want. If you make it illegal for oil companies or cap profit limits, guess what? They're going to scale back. They're going to stay below whatever price profit you set to not exceed it. And then you're going to have less oil and gas exploration, less oil and gas production, and then you got less supply. More, you got your demand that's still there. The price is going to go up. So his policies are going to make this price skyrocket even more. He needs to get out of the way. He needs to deregulate all his nonsense that he's doing with taxes and fines and this and that on the oil industry and make it more oil friendly, right? If he wants them to produce more and explore more to produce more, but he's not doing that. He won't do that. He does the opposite, and then he blames the businesses and the free market so that he can restrict with communist laws and socialism policies that beat down businesses and entrepreneurs that would love to open up. Usually, when you have high gas prices, you would have lots of corporations and businesses want to uh, produce more oil because there's money, so they want to produce more, right? Because they can make a profit and thus will increase the demand or supply and will drive down the price, right? Until there's an equilibrium. But his policies are anti that, and you're getting the result, right? So you can see what's going on there. And then there was something else I thought I put on here. Let me put this on real quick. I wanted to show you too the difference between how assets work, right? Risk assets versus hedges and the different things that happen, right? So if we go into our photos, we're going to go into here, then we're going to go there, 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 and choose. And now you can see year to date, gold is up $49 this year to date. It's not up, but it's not down. You go to the US, you go to Bitcoin, it's down 57.41% and 70% overall, but it's down 54.5% at current price when gold is up about a half a percent. Uh, Preserving wealth, gold, risk asset, Bitcoin, difference. Preserve wealth. Don't get rich by gold bullion, but you can preserve your wealth, right? And hold on, we're gonna have to bring him in real quick because there's a dog out here and I don't trust it. Hold on one second. Come on. Ah, fucker. Ah, hey, little fucker. You're like a tornado. Bastard. We'll go back out in a minute. Wow, you took off like a bat out of hell. All right, sorry about that. We opened up the door because there's a dog out there. Fortunately, it gave the cat a chance to take off running, but we had to make sure that that dog didn't come over here because these dogs like to come over here and we can't have our little fur ball. Whew, a lot of breath. It's hot. We can't have our fur ball getting in trouble, but you can see the difference between not getting you rich in bullion, but it preserves your wealth, all right? As I catch my breath, that was a fucking 100-yard dash. But you can see a speculative asset in times of crises crash, right? You can get rich, but in times of crises, whew, I'm getting old. In times of crises, risk assets crash, the stock market crashing, right? The NASDAQ down 32%. So you can see that there's a little bit of a difference there. Whew, fuck, it's hot out there. But now if you go into the Bitcoin price, after we talk about that nonsense, you can see the dollar has had a nice retracement today. It was down about 1.5%. You can see it's getting rejected. Oh, I can't catch my breath. Oh, I gotta try to finish this video after that little brief interruption, but you can see the Bitcoin price. Here we go. It's coming down, or not the Bitcoin price, the dollar. We came up here. We had a big rally after we were diagnosing and sniffing out where our support zone could be on the dollar. Now we're having a local rejection, and you could come all the way back down here and retest this lower support again, and then figure out if the dollar is going to break up or if the dollar is going to break down, which I could see the dollar breaking up higher, but eventually I think the dollar is going to break down due to this inflation, right? And the monetary policy is not enough. 75 basis points is not enough to do anything against inflation. When you have 8% and 8.6% inflation, 1.25 to or 1.5 to 1.75 overnight Fed rate, it's not going to do anything. You got to have that rate above the rate of inflation by at least a couple percent to do anything to tame inflation. And that is not where we're at now. And we're not going to be there, even if they raise it 10 more times, right? Based on half basis point rate hikes. So you can see that. And then we go to the Bitcoin price. You can see we got a nice bounce here at your lower support, this major area just above that 19,676 that we talked about as the last high in the way back machine back here. Even back farther. Where is it at? All the way back here was that last blow off top, and then from that blow off top to the end in a bear market that started just before Christmas in 2017, and it came down to its capitulation end at 83.66%. And you can see it took 344 days. So 1 year to bottom out in the bear market. And then it took another half a year to round that bottom down here and then start the next bull run, right? But it took a long time to get back on the bull run. And now, right now, at current price, you've had a bigger crash kind of faster. But if you go back from here, it's about the same time so far. If we take this, but we'll go use the all-time high. We're down at the all-time high 70%, and we're at 424 days from the double top, but from the second double top high, we're only at 212 days, right? We haven't had capitulation yet. Capitulation is when you break down below 19,000 and you steam towards that $13,000 target, and then much, much lower, where I believe there could be a phenomenal 3 to 5x return in Bitcoin quick is when the Bitcoin price comes down and tries to retest this $10,000 level. There's going to be a lot of buyers around 10,000 when it eventually comes down here. And I could see a 2 to 3x from there as you could stabilize when you get down there. If I don't know you're going to get down there, nobody does, but I believe you're going to get down there. But if you bought at the $11,000 level, I could see a big return on a quick pump of 1x back to 20 grand, or even blowing all the way back up, maybe even 2x, 3x, getting back to $20,000, $30,000 on a quick relief rally would be possible depending how sharp this comes down. But that's for another time and another place. And if you look at this right now, we're trying to bounce just above on this critical 20,479 level that we bounced on back here the other day. The first time came up, came back down to it, came way up after the Fed talk. Now we've just come back down to it. We're trying to hold that and bounce. If you can bounce on this, you could try to make a nice little rally, right? And come back up to that 22 and a half thousand dollars, which is a pretty big move from where you're at now with how much volatility there's been. That's like a 15-20% move. But the risk is if you fail to hold this and this consolidates in this area for a few days, right? It can consolidate for a few days, but if you breach this, you could have a pretty quick liquidation and a big wick to the downside right before any buyers come in. But there are a lot of buyers stacked here at that 19 and a half to 20,000. There's a lot of orders on the order book there, and there's a lot of buyers there. So we're going to watch to see what happens. But those are your two critical levels at 20,431 down to that 19,650 range. That's a critical area that you have to hold if you want to get a nice rally, right? And that's what we've been watching for. And if we expand now with some more data, which is data in the technical trading is the price action and time, and we have more price action, so we can move that. You can see we still have that major volume area up there. But then you notice this. This is what I'm talking about. If you can get a bounce, if you can get above this critical area right here, you can see where it's been trapping it on each bounce. There's not a lot of volume in here. There's really nothing. That's why when you came through, you wicked down, straight down. But then when you came to go through it and you broke this critical volume support, see that you broke this critical volume support, it flushed straight down, right? See that it came straight through it because there's not a lot of volume traded in there, right? And so on the way back up, if you can get supported and pull the temporary bottom, breach this candlestick here, right? We're going to put this in white. If you can get over top of that, and that's a price note, we need our rectangle. If you can get over this area right there, and if we zoom, when we zoom in, you'll see it's been forcing you down. If you can breach and get on top of that, you have a free reign to get back up to that major volume area, right? No, that's the white. You have a free reign and lock that to get up to that volume area indicator, the major volume area that would be bearish now, that was acting as support earlier when we were trading within that range for a couple weeks at about 20. What is that? Let's get rid of that. At $27,900, right? You could have a free and clear shot if you can get above this area all the way up into there, and that's a 25% move. If you could have the fortitude to get above this the area that's holding you down right now, because if you get above that, you can see with the volume, there's nothing there to get you to sell off until you meet all the sellers up here, right? That's how that would work. But on the contrary, if you can't hold this line, there's not really a lot of buyers. If you break the 19,676 old all-time high, the buyers are all down here, right? At about 12, 13,000, and that's a big fall. That's about a 30 to 50% fall, right, to where buyers would be. So that's what we're watching out for. And that is very critical right now with the Bitcoin price. And you can see when you bounced off this a couple times, right? You came up, got rejected, came up, tried to get out of it, peeked your head up and got shot right back down, hit it again, rejected, rejected, and then down, right? So on the way back up, this is going to act as resistance. When you come up into here, you got that green ring there, right? And it's going to act as resistance. But if you can get on top of this and hold a confirmed bounce on the top of it, you can have a free run to the upside. So that's what I'm watching out for right now in the Bitcoin price. And that's what I feel is the most important. And that technical analysis can lead you to the rest of these coins, even though the rest of the coins are kind of having more action than Bitcoin on the pumps yesterday. But that technical analysis you can use to see what's going on in the rest of these coins, because they're all kind of double bottoming in the same spot. They're all using the same route up and down. They're all taking that same route. And if we want to look at with here an XRP and a local volume profile real quick, you can see, and I'm going to get that video out for my man that wants one. You can see the local volume profile. It came right down to the mean from the bottom of the last bear market to the top of this bull market. You can see the mean volume indicator was right there at the top part of our orange support zone, or the last line of defense to the shithouse. You can see it's lined up beautifully with the volume indicator right there, and that's where we're trying to get supported on. And then if you can get some support, you could get a nice bounce back up into this area where all the sellers are, right? Major upper resistance. You can see this area is stacked with sellers. If you could bounce back up in that white area, but you're trying to get supported on this. But note, if you break that top part of that key area and that white, that red line that's coming through there, which that red line that's coming through there is the mean of the volume on this last run, you have a big fall down through to the bottom part of the last line of defense to the shit house, and that's all the way down there at 11 cents, right? So that's what we're watching. These are your two ranges right now that you're in, between that 29 cents and that 40 cents, right up in here. It's actually a little bit lower. No, that's the price up above there. You're kind of stuck in between your old resistance up here at 37 cents and the top part of the shit house at 29 cents. So that's what we're watching. That's what it's looking like. Support the channel. Links down below to do so. Like, subscribe, and share. And most importantly, hit that bell notification and share far and wide on your social media, YouTube, whatever you're on. Try to get the message out of Old Vincenzo so that we can impact more people and get people prepared and understand what's actually taking place in this inflationary depression, where the markets are going, the stock market, the gold and silver bullion market, right? And where everything's going, so you can be better prepared and have better buying opportunities and long-term stacking positions in crypto. Even if I don't often agree with what a lot of people think crypto is, if you are a diehard crypto and you believe in certain projects, old Vincenzo, with the knowledge that he's spreading to you and the information, can put you in a better, much better spot to know when to long-term hodl, when bull and bear markets are going to start. Old Vincenzo proclaimed the bear market last May of 2021 and said it would be a multi-year bear market with big volatile swings up and down. And now we're 16 months into it, a year and a half later, and you can see we're in the thick of this bear market now. If you're having liquidation uh, and liquidity problems with exchanges, Celsius, is on the verge of going bankrupt if the price of Bitcoin, unless they deposit more, falls below 16 or $17,000, right? So that's what I'm here to try to help you do. And you can see on a quick gold and silver bullion, right? You can see oil still going up, but you see gold. Like I said, year to date, gold is up on the year. The only major financial thing that's up on the year, the worst performing asset this year is Bitcoin, right? Followed by the Nasdaq and other stocks. And gold is just doing what gold does. It's boring. It's slow. It sits there and trades in the no man's land and nowhere, up or down for a long time. But when you put your money in there, you're not looking to get rich with the gold bullion. You're looking to get rich in the mining sector. But gold bullion's there to preserve your purchasing power for retirement, for areas to set money aside just as a hedge in case you have times of crises, right? You don't have your money going to zero, and it can just sit there and be a safety net as you go to look and stack on wealth. And you got to take a small piece of that wealth when you make it, and you got to stick it over there that's safe, that gets you a steady, a decade over decade appreciation, and not from getting rich, but just preserving the same purchasing power you had in 1980 to 1990 to 2000 to 2010 to 2020. If you had that gold coin or gold bar or even the ETF of it in 1980, if you sold it today, you could buy the same amount of goods and services as you could back in 1980 or 1990 or 1975 as you can today versus if you just had the cash sitting in an account, a bank account, right? It's a great way to preserve wealth and purchasing power. It is not a great way to get rich, but you know, when gold goes up 500%, you've increased, you're not worth 500%. And when you go and try to buy goods and services with it, you're going to have that purchasing power, right? So that's what gold's there for. And gold's doing exactly what gold bullion should do. It doesn't trade like a risk asset. It doesn't move 16, 25% a day. It's slow and steady and preserves your purchasing power. And whether it has bull markets or bear markets, eventually gold catches up. And as long as you don't liquidate your gold, right? It'll have that purchasing power and it will catch up with what's going on in the fiscal and monetary policies when there's disasters. But you can see right now, gold didn't year to date go down 50%. Like if gold did something like Bitcoin, like how a risk asset trades, it would have hit its all-time high here and it would be down sitting at currently Bitcoin's down, what is it, 670%. It would be sitting, the gold would be down at $660. Gold hasn't traded at $660 since back in 2000, shit, farther, back in 2007, right? It's been 7, 13, 14, 15, almost 16 years since gold's traded that far. And when gold retraces, it takes years to retrace. Like when you have this 2011 high, it didn't bottom out until it took 4.5 years to bottom out in gold. And it was a 50% retracement in 4 years, which is a bullish consolidation when you do that, right? And that's how bull and bear markets work. And then the bear market ended in gold, right? 2014, 15, you had that rounding bottom, and then you had the nice big move up. And now you're in another big, long, slow, boring consolidation. But you've the same stuff. If you bought the gold bullion down here in 2015, if you exchange that gold bullion today, 8 years later, you have the same purchasing power as you did back here. Even with all this inflation, if you exchanged it for goods and services today, it preserved that purchasing power over the last 8 years during a inflationary environment. Now the last 2 years gold has done its job, and if you bought gold bullion down here in the bear market right now, if you had to liquidate it to switch it for a house or whatever, even though a house is went up $250,000 in price for the median home, if you had $250,000 in gold bullion down here and you exchanged it up here, that house does not cost you 500 grand like it's costing everybody here with dollars. You're still buying the house for $200,000. The exact price essentially is what you bought that gold bullion, right? For you have that same purchasing power and you essentially sidestep the inflation if you use bullion to hold your wealth, to save, and to use that eventually to buy a house, right? Versus if you kept your 200 grand in cash down here, you would need an extra $300,000 added onto that to buy the median price of a home. But if you had 200 grand in gold bullion down here, right? And then today that gold bullion is worth, so you bought 200 grand in gold bullion. See how this works? Say you accumulated right in the middle, about 1,200. It was cheaper, it was more, but the average price for that 5 years, gold bullion at current price is up 53%, right? From there. So if you had $250,000 in gold bullion, 250,000 times 55%, it's increased 137,500 in purchasing power plus 250, your original gold bullion. You have $387,000 now, right? So you could go out and buy your house and you didn't have to add any more money versus if you had 250 grand in cash, you had to add that $183,000, right? Extra in new cash to buy that same house you were going to buy with gold bullion. You didn't have to do it because gold bullion did the job for you. Like, subscribe, and share. Peace and love.